Hello, 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 everyone. Happy Sunday. How is everyone doing? Summertime, end of summer on Sunday. So, let's see who's here. Good afternoon, Davey. Good afternoon, Patrick. It might be a lighter crowd today, but we will still go through it. I've got to do my market prep for the week. Hope you got to tune in to the weekly sector overview. If you didn't, please consider watching it. So, let's see. Oh, George is here now. Afternoon, just watched The Big Short for the first time. Wow, it's a pretty good movie. Glad you got to watch it. So, where do we sit? Oh, let's get to the housekeeping. By the way, if you are new here, please do consider subscribing, ring that bell, and hit the like button. Longer term viewers, leave some comments and like the videos. All right. Let's get right to it. We don't need to drag this out. It's, again, summer on Sunday in summertime. Why can't I say that? We got the Chicago Fed Activity Index coming out tomorrow at 7:30. It is minor, but we'll see if it's still in contraction. Everything's backloaded this week. On Tuesday, we have the S&P manufacturing flash for the composite of manufacturing and services. Going to be interesting to still see if services stays in contraction or if manufacturing dips into contraction. So we'll keep an eye on that. That is 15 minutes after the open. Oh, and then we have more Fed speakies after the close. Wednesday, durable goods, which I wouldn't put it high importance now. I'd put it more at minor. But we'll still see if that is rising, if it's got a positive component to it. And people have already accepted the housing slowdown. So pending home sales, then we got the crude numbers. And Jackson Hole officially kicks off Wednesday evening. Now remember, Powell doesn't speak till Friday. Thursday, we got GDP growth rate quarter over quarter, the second estimate. Okay, so this is back for second quarter. So we're going to see if how that gets revised and whether it stays negative, and I don't see any reason it should pop into positive. Continuing jobless claims, that's also on Thursday. So Thursday starts the real stuff with going on. So that's where we sit. We get the GDP price index. And then let's see what else. Again, you got Jackson Hole. Friday, as I mentioned, Powell speaks at Jackson Hole. And then you got the biggie. You've got the PCE numbers. And you know the Fed pays very close attention to PCE. So you have that 1 hour before the open on Friday. So that's going to be biggie. And then you got the Powell speakies at 30 minutes after the open, and you got consumer sentiment final for August. So Friday, volatility potential. All right, so Thursday and Friday, things are backloaded this week. Definitely backloaded this week. So that's where we sit. Oh boy, I didn't call up my earnings stuff. Hold on one second. Let me see. I'll have to call that up. I don't know why that isn't popping up. Huh. That's very interesting. My earnings stuff is not popping up where I saved it. So we'll have to take a look at that at least tomorrow morning. Again, healthcare strong on Friday. Everything else was weak. FOMC 40, 60%. So 6% still favors that 50 basis point. And these numbers aren't updated, but with the expiration on Friday, we are technically in negative gamma territory. Do keep that in mind. So let's see. That's where we sit now. Let me see something. Let me just see. I wish I could pause this for a second. But I can't, so hold on one second. Let's just see if I can call this up another way. I hate when I can't get... There we go. There we go. I want to get up that earnings stuff, and I don't know why my image wouldn't come up, so I had to grab it again. Here we go. Here we go. Got it solved. Thank you for bearing with me. Sorry for the interruption. Yeah, we can peek in at the yield curve too, George. Why are you guys... How are you focused on it going back to zero? What could that mean? Tomorrow, nothing much before the open. After the close, we got Zoom. Lots of people focus on Zoom. Not a lot of other stuff that I'm super focused on. Tuesday, gonna check out Macy's just to see how they're doing from a retail perspective. Uh, that's what I'm looking at before. After, I always like to check out advanced auto parts. That's sometimes in a bull market. That's especially some great trading. What else am I going to look at? Not much. Wednesday. Now, after the close is pretty big. You got NVIDIA, Salesforce. Oh, no, a lot of people follow Snowflake, Autodesk. Williams Sonoma will be interesting again from a higher end consumer standpoint. And you got Box. So there's a lot of stuff after the close on Wednesday, so that could feed into Thursday. So even after the close on Wednesday could feed into Thursday. Peloton, let's see how long they stay out of bankruptcy. Dollar General is fascinating to see how they're doing with the lower end consumer. And then after the close, what do we have? VMware is more minor. Dell is more minor at this point. And Friday is nothing. So Wednesday after the close is the big thing to watch for. All right, let's get to the markets. Actually, since you asked about it, George, yield curve. Here you go. And this isn't exact because these are using, this is off the TVC, and it's not the exact numbers, but it's close enough. And you see, yes, it is heading, it's still a long way out from zero, but it's retraced about 50% of its down move. And I'm following this as a double bottom. So yes, we should see continue to contract higher. And this is the 10s, 2s. The 10s, 2s. Why did George bring that up? Well, I've brought this up many times because once you see it get towards zero and then start accelerating above zero, that's when we start really seeing the bigger potential push lower in the markets. So keep close eyes on this, especially once it starts getting above negative 10 basis points, which, interesting enough, is nearly by the lows in the 4th of April. So once it starts getting above that range, really start focusing on it and potential major market rollovers. All right, S&P. Remember, things are backloaded. Daily cycles getting towards the bottom, but not yet at the bottom. They still have to bottom out and then turn back up. We did close within the rotation zone, and we closed below an ascending wedge. So we should, not necessarily every day, but should at least continue to watch for some pullbacks going into midweek. All right, so that's what it favors at this point. We don't have at least a decent pausing bar yet. So once we get a pausing bar, probably with some overnight price action, I will be looking to do some harmonic extensions down here, back from the high on the 16th to the pausing bar, which may be this low on Friday if we do get a bounce when the Asian session opens. Until then, I am focused on 42.11. Now remember, this was the acceleration move from CPI. Okay. So, was that from CPI or the 12th? I can't remember at this point. Boy, I just had a brain fart. Regardless, we're still in a clear path, so even overnight we could hit 42.11. The next major clear path move is once we get below 42.11 on a closing basis. And then that gets really interesting because we're into this clear path move. Now, there is a key stopping point. 41.83. You get below 41.83, you could easily see some more acceleration at downside. What am I focused on the upside? Minor would be 42.42. More significant is about 42.53 to 42.64 with the 4-hour rotation zone. So if we pop up here, overnight tonight, European and Asian sessions, I'm going to watch for key resistance right there. and then another push lower. Again, the bigger targets are back down closer to this 41.56 area, especially with that triggered wedge. Well, actually, Bitcoin has lost a little bit of its correlation recently because it's been weaker than the NASDAQ. It was at 80%. It dropped, I think, into the 60%. So, why are they so correlated? Because a lot of stuff's trading in unison. Bitcoin is a risk asset. And especially with the market dropping again, then... And Bitcoin, you still have a lot of stuff unraveling behind the scenes. I am not bullish on Bitcoin. We ran up that 25K level. Now we've broken back down. Yes, we do have a little triggered double bottom. So I'm watching for this continued bounce and then a rollover play, especially once we start acceleration to the downside with the markets. Now, my overall viewpoint is we will pull back. We still have weekly cycles at the top. We'll pull back. We'll probably get another with a daily. We'll probably bottom, pop up, and then the next rollover with weekly cycles still heading down. The next daily rollover with weekly could start the bigger acceleration down. So I'm watching for the minor drop, a bounce, and then a more substantial drop. Remember, I talk about after we get a decent sell-off, a secondary reaction. Okay, and even if, let's say, we start tomorrow and it starts in bullish mode and we come back out, that's still a secondary reaction. We did hit one of my full targets based off that 200 moving average. Now, keep in mind the medium to long-term signals we follow. I had a couple of them flip last week. And so it is in that bullish mode. So we could see some still. Things don't generally roll over as quick as they bottom. Because you have a lot of people still going to come in here, try to buy the dip. Hey, we got a pullback. This is my last chance to get in before. I mean, how many times have we seen people pop in all-time highs by September or all-time high by December? I'm not buying it, but, we'll still have to play the odds right now watching for this pullback. Hello, Lauren. How are you doing? Thank you for tuning in. NASDAQ. Again, you see that down 188 basis points. Stopping at one of those key levels, this 13,240 area. On an overnight bounce.
Sorry, could you say that?
On an overnight bounce, we've got... On this, your minor area, I'm going to jump up. It's 1 hour rotation zones just overhead. So minor would be about 13,320. More significant at this point is 13,392 to 13,400. If we did rally up there, I'm watching for another rollover play. I'm really paying attention to this 4 hour rotation zone. Hey, Josh. We break below. I mean, we are still in a clear path. So even if we bounce, we're into this clear path move, and we technically should come down. The first target on the clear path move is this down here, 13,055, and then 13,000, which is the technical end of the clear path move. So we should technically see some more downward pressure, even if we bounce overnight. And what will be interesting to see how this closes relative to this lows back at the 9th of August. And then if we close below the rotation zone, I would still be watching for the secondary reaction back up. And it could be forming a potential head and shoulders. We'll keep an eye on that, especially with daily cycles getting closer to the bottom, but not yet at the bottom and definitely not turned up. And weekly signals still trying to roll over. So, can this still be played to the short side? Yes, but I wouldn't get, from my personal perspective, I wouldn't get like, let's load up completely on the short basket, because I believe there'll be enough time on a secondary reaction to get some decent short positions on. You can play it short term to the short and more medium term, bounce, and then some more substantial shorts. If we don't take out the most recent highs, but that's why we have to evaluate the secondary reaction. Dow, interesting enough, we have this wedge pattern. The S&P did trigger, the Dow did not. And also the Dow did not close within the rotation zone. Both the S&P and NASDAQ closed within the rotation zone. The Dow did not. So the Dow holding up the strongest so far, which is sort of typical given that the Dow has some of the more robust, I'll call it the old blue chips in them. So generally when you see the rollovers, you see the NASDAQ and Russell first, and then you see the S&P, and then you see the Dow. And the Russell rolled over bigger than the NASDAQ. So that's why we've already got some initial confirming downward price action, as is typical when things roll over. So what are we watching for in the Dow? You see finally the first separation. My area I'm keying off of, especially overnight, is right around there, about 13,850, 13,840 for a bounce play. And then support coming in at 13,578 to 13,600. Below that, you don't, this is not an advanced clear path. It's actually a super advanced clear path. But we break down below that. You don't have the same velocity downside. You got 13,300. Yeah, I saw that, Lauren. And we could very well. I think the markets aren't prepared for where we're heading. I actually sort of agree with this, especially coming into the winter months. I think the market has not discounted enough with earnings contraction. I think Europe's going to get slammed. I actually think the U.S. is going to get slammed even harder this winter. And we're going to get far more earnings contraction than people see. And based off even the forward PEs, if you use the 15 times multiple or the forward earnings that are still projected, I can't say forward PEs, I'm saying forward earnings that are projected, even if you take a multiple of 15, the markets should be, the S&P should be trading closer to 3,000. Now, you know, a lot of firms are still saying, you know, 15, we've already seen the bottom. We got down to 17s. No, I think there's going to be bigger. So I actually agree with this. And I think Europe's going to lead things a lot lower this winter. That's just my macro. And you know, I've been talking about a recession sooner than later. Whether we're technically in it or going to tip into it this quarter, you know, I'm watching those numbers, the continuing jobless claims, because that's another indicator. But the timing doesn't have to be exact, because the market's going to start reacting more and more once we get really some major earnings compression. I think it is a house of cards too, but things can stay in house of cards mode with only a partial of the stack blowing over before the whole thing blows over. Russell, which the double that never triggered. You see Russell down 213 basis points. Next major low area is this 1934 to about 1941. We'll take a look at this overnight, but major resistance coming in at 1976. Trading events a very key level because, again, this is in a clear path move. And if you break down further from this, which I am expecting, the breakout zone, the full targets are so close, but the next major target is 1915. The DAX. Pretty substantial closing right at the bottom and below the 50. We start breaking below 13,480. Watch out for the DAX to hit 13,340. So that's really, then I'm watching, otherwise I'm watching for a little minor second bounce. So Notes. Closing into that 50% retracement. Once we start the bigger pullback, I'm watching for the rally. Can't get bullish again on this. Longer term, we triggered a bullish pattern. Did not hit stop reduction. I was asked again in Reddit land. Come on, give me this one. The conservative stops below 116.19. The aggressive stop, and I'd be using the conservative one, is below 117.05. But 117.05 areas is where I'm watching for a pullback. Other than that, there's only an aggressive potential buy on a Monday or Tuesday close above the high here, above Friday's high. Sorry, I meant Discord. I'm not on Reddit. I meant Discord. I'll check Oxy in a bit. Crude. Still, the only thing that can get me bullish in the short term. Why? Because we've triggered a long-term bearish pattern. Now, I'll get more bullish after potentially the midterms, no matter what, heading into some winter months. But I need a close back above this double bottom peak and the 200. And then I just get short-term bullish. Other than that, watching for a rollover play. But we don't have cycles at the top. So I'm more watching for daily cycles to top out. And weeklies still at the bottom. So even if we hit this, it would be really nice to hit this double bottom play, because then we could get up to a weekly rotation zone, get these cycles reconjoined, and then make another potentially lower push. My target I'm really focused on is the 77.56 area. But it's at this point, unless you're playing really short term, it's sit on hands. Natural gas, we still have the potential double top in place. If we do break above this 965, then that's a bullish breakout to, and remember, you still got the cup and handle pattern. That's a bullish breakout to 1020 to 1031. Gold, watching for the pull, still sitting here watching for the pullback, seeing if it gets some bottoming between the 50 and the 62.5. Dollar index, again, the close above the 62.5, we should target 108.56. Let me jump to the euro, because we got the shake and bake pattern here and the close below the 62.5. So we should be testing parity to possibly down to test these lows in July. So not shocked with that price action. Again, the shake and bake was breakout one side of horizontal channel, suck people in, and then quickly reverse and break down the other side. It shakes people in and then it bakes them. So watching for a continued downside price action in that. VIX we'll take a look at tomorrow morning. We did have a potential that turned into a triple. Not going to get interested unless it... I'm not going to get more so super bearish until it gets back above 21.55. We'll judge that on the open tomorrow. Bitcoin broke that key level, broke my 22.6. Again, we were in the flagging channel pattern. Target was this 25. Hitting it multiple times, then rolling over and breaking down not only below the key support 22.6, but the channel. Now I'm watching for rollover sells. And this is being a little patient with this. We had this double bottom trigger. The targets are 21.658. Now it is lower probability because it is against the daily and the 4-hour rotation zones. 21.8, 15, 21, 963, but really focusing on this first and second targets. And then once we close below 20,435, watching for a retest between 18,523 to 17,567. Tesla, we still have the major double top still in play. I'll just show you what else I'm watching on the minor. We bounced off to 62.5, so minor. I'm watching for a close below 877.79. Otherwise, we're in a slow bounce mode. It would be a very aggressive buy on a close above the Friday's high. That can be played intraday on a break above Friday's high and then only held overnight with a close above there. All right. You want an Oxy. This, this is very interesting to me. Because, yeah, it's longer term bullish. I'm watching for a slight pullback play over the next little bit. Okay, so I would not be chasing it here yet, from my personal perspective. Now, if it does break above 100, 76.51 stop reduction, 78.97 next major target. It is a little overextended with 4-hour cycles at the top. Daily cycles still moving up, so we could see some slight upwards pressure still with some choppier. I know people will be chasing this higher. But here's the other thing. Weekly cycles at the top and, again, very overextended. So personally, I would not be chasing this. I'd be watching for a pullback or a consolidation play and then the potential breakout play higher. And you got the Buffett factor with he can buy up to 50% of it. But I'm very cautious with, yes, there could be some more upwards, but it's generally, once we run up to these highs, there should be, it normally will test it. So we could see a little pop. It could be interesting for an intraday play. We got a pause bar right here. So from an intraday perspective, I'd still consider playing it to the upside. From a more swing trade perspective, I'm on the cautious level. And see, you have this from the lows, from this most recent major push up to this pausing bar. You got, so here's how you can use some of the stuff. Because I'd be watching for a reaction between the most recent highs, 74.04 to 74.43, as another pausing area if you're going to play something to the upside above 72.48. That's how I'd analyze it and watch for a distinct pause there. So this wouldn't be stop reduction. This would be intraday, take some profits off. But these harmonics really reinforce. If it chips away at this and then sits sideways and builds a nice solid base at the top, then we could get that really strong breakout play to the next cluster area. So you have short term and the reverse harmonics. Why am I not coming back down to here for the forward harmonics? Because I already have on the reverse harmonics, so I'm using the most recent major swing, which is here. This would be a minor swing, which you could use for intraday stop reductions. So again, this is more of a teaching exercise as we sit right now. I'm just trying to get people to understand. So if you wanted to use the most recent swing for some more intraday, let me just take it to this one. Would be 73.73 would be another stop reduction area on a push above 72.48. But the stronger harmonics are this highs to 74.43 and then the next major cluster. On a pullback, I'd be using the 75% retracement harmonic still with the rising 1 hour rotation zone. So that would be 68.75 to about 69.11 area with the rising 4 hour rotation zone. That would be the first. And the major area would be this prior breakout area. I'd go a little in front of it with the still the rotation zone and 66.65. So that's how I dissect that. All right. Not seeing any more questions. Oh, what's your feel on oil? USO has been stupid liquid for options. We've October 775 debit call spreads looking to take 30% profits tomorrow. That's going to be I analyzed I like analyzing oil because of the issues with USO, but we can peek in at that. So you have a debit call spread 70.75. You got your bounces in there. Yeah, I have no problem. I can't give individual trading advice, but I would not have an issue with taking off 30% profits tomorrow. And you still have cycles going up, just as I covered in crude. All right, so I have no problem with that, especially with the daily cycles still moving up. And even in some more bullish play to the upside, you could easily see more towards this 76.50. So that would be a possible next target. This is not a double bottom in USO. And this is why it's USO. This is why I'd rather still do. You can use USO as some areas for targets, but I still like to do the analysis. See, crude, you have a double bottom. You don't have a triple bottom. Crude trades more naturally than USO because of the way the ETF is constructed. See, USO, you have a triple to actually quad bottom here, which you don't see in there. So I like to analyze crude and then do the levels. You can analyze the levels on the USO. So the only thing then above the 50, about the 76.50, then I'd watch for the potential gap fill. So the next target would be 78.05 should we more so trigger that double bottom in crude. All right. I'm not seeing anything else, which is good. We can now call it a day, watch the overnight European price action, and then come back tomorrow morning and set up some more key levels for not only short term. I sort of gave some other key swing targets too, but it'll help getting some more short term levels going into tomorrow. Remember, this week is backloaded. I guess starting Wednesday afternoon with some major key earnings, and then flowing into Thursday with the second estimate of GDP with Jackson Hole, and then followed through by Friday, Powell Jackson Hole speech, and the PCE numbers. Everyone, have a fantastic evening. Thank you for tuning in. You are welcome, Davey. Enjoy the rest of your Sunday. Take it easy. If you're done with your pre-market analysis, enjoy some nice summertime weather, because before long, unless you live in sunny Florida or something, or California or Arizona or Texas, it's going to be winter before we know it. I'll talk to everyone later. Bye.